8 key assets for financial success. Almost everyone around the world has their own ideas about what financial success means to them. For some, it's having enough money to support their families and a comfy home. Others see it as being able to retire without financial worries, while some might view it as having the means to generously help those in need. However you see it, being financially stable really takes a load off your shoulders. It means you don't have to stress about your family's basic needs like food and shelter. Knowing there are systems and strategies in place for financial success is reassuring. One way to achieve this is by investing in assets that can grow in value over time. Figuring out the right assets to invest in involves understanding your goals, having a good balance, and knowing your values. If you're curious about the various types of assets you can invest in to gain financial freedom, stick around. And hey, if you haven't already, give this video a thumbs up for the YouTube algorithm. Now, let's dive into it. 1. Bonds. A bond is like a loan where an investor lends money to a borrower, which could be the public, an individual, or a company. Typically, the borrower is either the government or a corporation. Important details like payment terms, interest rates, and the time until the loan matures are clearly outlined. Bonds are assets that can be bought and sold in the market. They usually provide a fixed income to the lender with set interest rates, ensuring you know exactly how much you'll receive when the bond reaches maturity. This stability means your wealth can steadily grow. When choosing a bond, it's essential to do your research to find out that fits well into your investment plan. Overall, investing in bonds is a secure path to financial success. 2. Stocks. A stock is like an ownership certificate for a piece of a company. When you own stocks, you own a slice of that business and you get a share of its assets and profits. The amount you receive depends on how much you've invested. Each unit of stock is called a share. Buying and selling stocks follow government regulations to protect investors from any unfair practices that could lead to losses. Most stock trading happens on the stock market, which exists in nearly every country. For example, in the US, there's the NYSE and the Nasdaq, while the UK has the London Stock Exchange and South Africa has the JSE or Johannesburg Stock Exchange. Nowadays, online stockbrokers make it convenient for investors, but it's crucial to do your homework and choose reputable brokers. Individuals can also buy and sell stocks online. Investing in stocks can be profitable, especially for long-term investors, as the rewards can be substantial when a company performs well and its share prices consistently rise. However, stocks aren't immune to market changes that can affect them negatively. To manage risks, it's smart to diversify and invest in different stocks because there's no guarantee which way a company might go, impacting share prices and dividends. Despite the uncertainties, in general, stocks have a positive impact on building wealth. 3. Real estate. Real estate refers to a real property, which includes land and anything permanently attached to it. It can take various forms, such as undeveloped land, industrial or commercial properties, and residential properties. Real estate is widely recognized as one of the assets that appreciates the most over time. Many people have built and secured their wealth by engaging in activities like buying and selling real estate, constructing rental properties for residential or commercial use, and engaging in farming. Investing in real estate with a long-term perspective often proves more profitable than quick buying and selling. The value of real estate tends to increase over time, and even in less populated areas, properties can become more valuable as the area develops. While real estate is generally a lucrative asset for achieving financial success, it comes with certain risks. Investors need to be aware of factors such as real estate bubbles, which can impact property values, and the presence of fraudsters in the industry. Despite these risks, thorough research and legal safeguards make real estate a viable and, to a large extent, beginner-friendly avenue for accumulating wealth. It's essential to be cautious, but with proper due diligence, real estate remains an attractive and potentially rewarding investment. 4. High-yield saving account. A high-yield savings account tends to offer higher interest rates compared to a regular savings account, but it also comes with increased risks. Every investment carries some level of risk, but the key is to understand these risks and take steps to minimize them. Despite the inherent risks, this type of asset can provide a substantial interest rate on your investment, and the more you invest, the greater the returns. The interest rates may be influenced by the overall economy, especially during challenging economic times, but in many cases, you can still expect a decent return. When venturing into high-yield savings accounts, thorough research is crucial. Identifying reputable and established players in the market can significantly reduce the risk of falling victim to scams or losing your investment. Many individuals have achieved financial security by wisely investing in high-yield savings accounts. While a traditional savings account might feel safer, the returns are often minimal. Taking a chance on a high-yield account could be a strategic move if you're aiming for financial freedom. Just make sure to do your due diligence and choose trustworthy options in the market. 5. Collections. Collecting knickknacks is a popular hobby that many people enjoy, but what's surprising is how valuable some of these items can turn out to be. Even if you spend money on building your collection, the rewards during a sale can be quite satisfying. The main challenge, however, is that it's hard to predict if your items will fetch a good price in the future. This is where research becomes crucial. Having a rough idea of the current value of similar items can be helpful, especially for new collectors. For seasoned collectors, the collecting journey becomes more manageable as accumulated experience offers insights into the market and the value of various items. If you're considering starting a lucrative collection, here are a few options. 1. Aged wines and spirits. Wines and spirits that have matured over many years can be scarce and valuable. Platforms like Vint may be of interest. 2. Fine art pieces. Investing in fine art can be expensive, but choosing the right piece from renowned or up-and-coming artists can prove to be a worthwhile investment. Check out platforms like Masterworks for art investment opportunities. 3. Vintage cars. If you enjoy restoration work, vintage cars can be a rewarding collection. Although it's an expensive hobby, restoring and selling these classic automobiles can be quite popular among enthusiasts. These are just a few examples of what people collect. The key is to choose items that hold or appreciate value over time, contributing to wealth accumulation when the right opportunity arises. 6. Certificate of Deposit. A certificate of deposit is a document issued by a bank when someone deposits a sum of money for a specified period at a fixed interest rate. It's a smart way to make your money grow, especially if it's funds you don't need to use immediately. Instead of letting your cash sit in an account with no interest, a CD allows it to earn interest in the cash deposit account. To get a CD, you go through the bank of your choice. It's essential to ensure that the bank has deposit insurance to protect your money in case the bank faces financial issues. The bank pays you interest as agreed when you deposit the money. Once the deposit term is over, you receive your initial deposit along with any accrued interest. This asset provides a method to make money, and depending on the amount and duration of your investment, you can determine the level of wealth you want to create. It's worth noting that, like many things, CD interest rates are influenced by fluctuations in inflation rates. In periods of high inflation rates, CDs might become less attractive due to lower real returns. 7. Mutual funds. A mutual fund is essentially an investment where multiple investors pool their money together and trusting a fund manager to invest on their behalf. It can also be seen as a collective investment vehicle with the resulting gains shared proportionally among the investors. The fund typically invests in their various assets such as treasury bonds, treasury bills, and other appreciating assets. Mutual funds are attractive due to their built-in diversification, making them a solid choice for increasing wealth and net worth. One notable advantage is that mutual funds can be easily purchased through numerous brokerage firms. Additionally, they often come with tax benefits depending on the investment vehicles used, making them a favorable option for many investors. It's important to note that investors don't have a say in where or how the funds are invested, as they lack ownership rights in the holdings. If this lack of control doesn't bother you, mutual funds might be a suitable investment option for you. 8. Private equity. Private equity refers to capital investments made in privately owned corporations. Unlike public equities, private equity is more appealing to investors due to the potential for higher returns. When you invest in private equity, you acquire an ownership stake in a private business, which can be an existing enterprise or a startup. This means you'll receive a share of the profits and may also receive a lump sum if the business is eventually sold. Investing in private equity typically requires a substantial investment, and investors usually need to be accredited or act as venture capitalists. Investing in an established or startup business involves risk, requiring careful research and due diligence. However, if you make the right choices and invest wisely in private equity, the potential returns can be highly rewarding and contribute significantly to your financial success. In summary, equal opportunities exist for everyone. Let's stay motivated to go out and invest in assets that can genuinely improve our lives and lead us to financial freedom. Thank you for watching. Don't forget to hit the subscribe button if you haven't already. With that said, have a fantastic day and I'll see you in the next one.